Hey everybody, we're going to take a look now at the grains market. There's a couple of these grains that are set up based on the commitment to trader strategy. So let's look at soybean oil and corn. So starting with soybean oil, where we always begin is over on the commitment to traders commercial index. So we see that relative to the last 26 weeks of positioning, the commercials are very, very short here with this red line. Now we see also sentiment from the advisors is just about getting over the bearish line. So it's not quite there. So it's very close to a sell signal, but we can't technically call that a sell signal yet. So over here, looking at net positioning, we see here the red line is the commercials net positioning. And we see here that they are more short than they've been since the last time they were this short was January 2023. So they are very, very bearish, this market. And if we actually go back here and look at the net positioning overall here, this is the red line commercials, and then the blue is the large specs, and the green is the small specs. We see that we're getting that nice bubble up forming in the positioning. So this tends to happen. We get this nice bubble up. In this case, for a short, is creating this kind of this bubble. We see this bubble happened here. Well, that was a nice short. This bubble happened here. That was a nice short, nice bubble there. So we're getting that nice bubble here starting to happen. So that's supportive of our idea to go short soybean oil. Then we also have over here valuation. We are still overvalued on soybean oil relative to the price of treasuries. Not quite there on gold, but we are overvalued relative to the price of treasuries. Now, if we actually look at the ADX, we also had the punch confirmed. So the punch happens the pinch. So price is going up, and then we had this stochastic going up and into the overbought area over 75, and then we had the ADX going down. Now this got confirmed this week when the ADX rolled up. So the ADX turned up and confirmed an uptick. So that is the pinch confirmed. So that's an end of trend kind of indicator for up moves. So that's supportive of looking to go short. Now if we go back to this indicator here, we'll see the true seasonal is this blue line, and generally the market goes down until mid-December. So that we have seasonals, we have commercial positioning, we have valuation, we have the pinch confirming. We just about have a sentiment confirmation, but not quite. And then over here on the positioning side of the small speculators, who often do get it wrong in this particular market, we see they're very bullish. They're actually more bullish than they've been. The last time they were this bullish was November of 2023. So basically a year's worth of positioning, they're the most bullish they've been. So that's actually a good sell signal for us. And then we do have supplementary indicators. We have the percent R over here is in a sell zone. We have the ultimate oscillator is giving some divergence. And then we also have, of course, the stochastic I just showed you was in the overbought territory. So we have a whole lot of ingredients for a nice short here on soybean oil. From a cycles perspective, from about mid-November, there's a decennial cycle to go down to December 8th, and generally just keep going down till February. There's a strong cyclical similar year composite to go down till December. So the three most similar years of price action the computer found and made a composite of it, and that composite of basically shows this market to go down till December. We do have some other cycles, none of them really lining up too much with this trade idea. But anyways, there's enough ingredients for going short soybean oil. Now let's take a look at corn. I'll admit corn I'm not as big of a fan of, and I'm going to show you why. Soybean oil to me is the one that has the nicest setup. So right here, starting on corn, commitment to traders commercial index, we're very short relative to the positioning of the last 26 months. So that is supportive of going short this market. Basically, if we look at the net positioning here, which is their red line, they're the most short they've been this year. Basically, last time they were this short was August 2023, which was way back here. So their commercials are actually very short corn right now. If we look at open interest, I'll open up corn here, and we'll see that open interest is generally spiked here the last couple of weeks. It's gone way up, way up. Generally speaking, major highs are found with high open interest, not always, but so open interest has spiked while the commercials have been getting out and this open interest spike has been driven by the small specs and the large specs. So that is bearish as well. We also have the pinch setting up on this market, but it's not confirmed. Like on soybean oil, it confirmed. Well, on corn, it's not confirmed. So what that means is price has been moving up. The stochastic is above 75 and the ADX is going down. So now what we need to happen is for this ADX to tick up for this to confirm this pinch, and that would be a bearish sell signal as well. On this corn market, we do actually have some bullish divergence on the price, open interest, and volume. If I open up that chart here, I'll go back here, corn. So we do have some bullish divergence on the price, open interest, and volume. But so they had higher low, lower low, but we do have some sell signal with the stochastic, and we do also have momentum bullish divergence shaping up here, and that is a big one. Actually, this is a major divergence shaping up on corn, which is why I'm not as happy about this one, because we do see this low price made a lower low, while this momentum indicator is making a higher low. So this does not confirm until this high made during this divergence gets closed beyond by the oscillator. So this isn't confirmed yet, but that is a major divergence, and if it does confirm, these shorts are not going to do so well. So that's what I'm looking at for grains this week. Basically shorts for soybean oil and corn. Again, not as excited about corn as I am with soybean oil. That being said, I'm also not saying just short these markets right now. What this means is these markets are fundamentally set up for a change in trend, and in this case to the downside for shorts, but these are not confirmed until we get a trigger. And a trigger, there's a variety of triggers you could use. I use 3, and I teach them on my channel. If you want to do some digging, I'm sure you'll find them. And this is it. If you have any questions about commitment to traders, feel free to shoot me a message. If you like my channel, please follow and subscribe, or whatever they call it, and like the video. And I hope you guys found this information valuable, and you guys have a great rest of your week. Thanks for listening.